Morning all. How are we all doing? Sorry, just checking the news. Oh. Sorry, something open. How are we all doing? Morning. Really late this morning. Had to have a shave this morning. Takes about an hour. Just to let you know. Just a quickie before we start. We talked about this 145 level on US dollar yen yesterday in the live room. And I said to watch this level yesterday if we hit it. We didn't hit it yesterday. We did hit it overnight. Basically, the big round numbers obviously have limit orders set at them. The banks use big round numbers for movements. This is also the first intervention in the US dollar yen that happened last year. So price moved up into 145. We got a big rejection candle out of that and a reversal alert this morning. So just to let you know, obviously we looked at this yesterday. Doesn't mean it's going to hold, but obviously we've had a big old rally on this US dollar yen. We're due some yen weakness. All the yen pairs are pausing at the moment. So I think there's a good chance we might get a movement started on this yen. And obviously we'll look at the news in a minute. There's been more talk about it overnight. So just to let you know. Morning, Danny. Morning, Steve. Burke. Morning, Martin. Pip. Are the Japanese on the move? Hopefully. Morning, David. JC. Amy. Peter. Kennelly. Christian. Tendirikas. Virginia. So yeah, the big decent moves basically started on this. Morning, Gavin. We'll see if it holds. Basically, we need a low break. So think daily. Yeah, we're bull. It's just bull candles all the way, virtually all the time. Every now and again, we get the odd break below the low. We don't often hold it. Yeah, but it's just about holding on below the lows when we do get a down candle. So on the lower time frames, when you look at them, what you've got to think is we got to break this low. Yeah, and we need to hold the low. We need to close below that low. We need to close below ADR. That will entice the sellers to start to come in, and it will also encourage everybody that is long this to start to take profit. When they see some bearish price action, it encourages the sellers because it encourages everybody that's a buyer to turn into a seller to get out of their positions, and it just starts that cascade effect. So hopefully, we'll see. We've had the reverse alert though, which is first step, obviously. So looking at news, we've got 5 minutes to the open. It's the last day of the month today. So last day of the month, we often get big moves. It is also the last day of the quarter. So the market moves in monthly and quarterly cycles. Yeah. So the 24 and the 72 moving average here are your monthly and your quarterly moving averages. The reason they're on there is because that's how the market tends to report. So we have got potential for a big moving day today, as the market basically will, or market participants will try and balance the books, get profit targets hit. Shareholders and customers, i.e. investors in investment houses, hedge funds, all that sort of stuff, pension funds, will all be looking for a return. And quite often, end of month, end of quarter, we get large moves happening in the market as they position themselves to get those targets hit. So keep your eyes peeled today. It might be a biggie, might not be. Market's just not reacting as normal at the moment, as we know. So it may do absolutely nothing. But CPI for the yen was a negative. So, of course, we've had some strength in the yen because it's all making sense at the moment. We've got CPI this morning for the euro, which probably won't do an awful lot. We know what the CPI is going to be because we had the German one yesterday. Where's that gone? There. Which was positive. So the main news we've got today is GDP and PCE for the US and the CAD at 1:30, an hour before the market opens. Then we've got the revised University of Michigan and the business outlook for CAD. So 1:30 is news today. That's it. Overnight news, not a massive amount today. We've had the Japanese coming out again, getting a little bit more aggressive in their statement. We've had the UK GDP this morning as well, by the way, which came out as forecast. So ignore that. Royal Bank of Australia is to raise rates to 4.6% in August, according to a poll of economists. Economists aren't the Bank of Australia, so ignore them. But 4.6, I can see that in 2 months, 2.25%. So 2 more interest rate rises on the Australian dollar. Fairly bullish, but I mean, there's some massive problems. So I'm not sure we'll get a movement on it, but anyway, we'll see. So the main thing that we're interested in, obviously, at the moment is Japan. So these 3 items here, they never put them in red. I really wish they would, because it's so bloody important. But anyway, they don't. So Suzuki, the current circumstances are not favorable to current policy issues. Excessive moves will be met with appropriate responses by the government. FX should move steadily in response to fundamentals. I've read those back to front. What you should be reading is him saying FX moves should be steady in response to fundamentals. Excessive moves will be met with appropriate responses from the government, and the current circumstances are not good. So what he's saying is, what we think should happen is FX movement should be in line with the fundamentals. Yeah. Excessive moves will be met by the government with appropriate responses. And we don't like the way that it's currently going. Yeah, so exactly the same stuff. It's just they've stepped it up a gear by saying excessive moves will be met by appropriate responses. We will not intervene, but we will intervene, basically, is what they're saying. So bear that in mind. Still, they are still talking about it. They are still unhappy with this. We did hit that 145 level, which was where we got the interaction from the yen last time. 300 ADR. We were down there. If it happens, when it happens, if it happens, that's where we're going to be, down there somewhere. So, and it'll be literally in an hour. So make sure your TPs are nice and wide on the yen pairs, just in case. But still, if you get into profit and you've got a decent amount, take it off, just like a normal trade. But obviously, you know, keep your eyes peeled. DAX is about to open. We've got a gap down this morning on the DAX. So we're on our way to gap fill land still. We've got this little one here above us. ORB is short. Whoa, that's a lively this morning. Holy crap. That was a bit of slippage, wasn't it? Wow, that was a massive slippage this morning. Look at that. That line should be there. There's nothing you can do about that. You saw how volatile that open was. There's a lot of volume going through this morning. I don't like the look of this. This is either going to run really fast and hard, or it's going to whip soar like a lunatic this morning. What I was going to say was, before it opened, we got a gap down today. So obvious move would be get that sorted and then rally up to do these other gaps. And it's obviously tried to go short at the open, but we're meeting a bit of resistance at the minute. So a lot of volume, lot of slippage as well. Look at that. I got slipped positively and negatively, right? So that is the entry there. That's where the pending order should have gone in, where the red line is, which is that's the high there. So you can see that pending order. So I got slipped down to there on one position, and I got slipped positively on the other one. So I actually got a better price on one trade and a worse price on the other one. So it evens itself out. We'll let them have that one, seeing as they slipped me. That's the first positive slippage I've seen. Right. I'll take it. We'll have a look at the DAX in a sec and just catch up with the chat. Morning, Stevie. I am short yen. Gavin, you mean short against the yen? So you're short XXX yen, US dollar yen, you're short, pound yen, you're short. That's fine. Don't be short the yen, though. You want to be long the yen, i.e. you want to be short everything against the yen. What's the purpose of being able to trade in pre-market hours? I don't know what I mean. I don't mean. What's the purpose of being able to trade in pre-market hours? To have access to the market, I guess. I don't know. Australia is last day of financial year as well. Is it? All right. Morning, Franco. Morning, Astro. Morning, it's time. Will the market force Japanese bank to take action? We will see. We will see today. Well, not today, but we will see at some point. Like I said, there's two options basically. As they're saying, either you do it, market, stop selling the yen, or we will stop you doing it and force you by buying the yen. Yeah. So it doesn't matter either way. Either the market will get the message as it usually does, or it will be forced to get the message. But as we saw last time, they forced us to get the message, and then the market went, yeah, we still don't want to do what you say, and then they really forced the message. The market did do what they said, which is why they don't tell you when they're going to do it, because the whole purpose of it is harm. Yeah, they want banks and institutions to get hurt, go into drawdown, get squeezed, lose money. It's a deterrent. Yeah, that's basically what it is. If they buy a ton of yen and you're long on it, you're going to get hurt. Doesn't matter who you are, they will move it. The Bank of Japan have more money in Japanese yen and can buy more yen than everybody. So if they want to do that, that's exactly what they will do. So there's a short target today on the DAX. Let's go back to the DAX quickly. So yeah, obviously gap fill today would be beautiful. Let's just go down and get that sorted. Then let's rally up for target. So there's these two gap targets there, 150 ADR and above the highs. So obviously yesterday we got a double top at this level. So this level here where we pushed up, didn't get that gap fill. We pushed up into that previous day's low, rallied back off of it. That's where we came up to on Wednesday. Yesterday, we double topped it. Today, we've opened there and rejected it. Yeah, so this level here is massively strong at the moment. If we break that level to the upside, we're going to fly straight through that gap up to ADR and attempt to run on there. So 150 ADR is your upside maximum target today, but obviously there's a lot in the way. So let's see if we can get this gap to the downside done first. There's your 5-minute ORB. So we have broken short. Lovely trades on the S&P yesterday. So remember yesterday we had that really whippy, nasty open. The short got stopped out. The long, beauty. Really nice. That was the TP1 and didn't get to TP2, but yeah, closed out really nicely yesterday on the S&P. And the Dow was obviously a nice long as well. So we went, the Dow ORB was straight up, which is lovely. So pulling back up inside the opening range minute. So there's your 5-minute opening range. Higher low. We'll see what happens at the open there. Right, we'll just leave that running for a minute. Looks like he wants to flip long, doesn't it? Which will be annoying if they leave that in play, because it means on Monday we're going to have a gap down and gaps up to target, which makes it a little bit more difficult to pick a direction, doesn't it? But see. So at the moment we're inside bar. Closed a couple of bits out this morning. So yesterday, where are we? 29th yesterday, wasn't it? So euro pound yesterday, closed that short. So that was an H1 M5 mean reversion entry yesterday, on Wednesday rather. Closed that out yesterday. So straight in, straight out. Very nice, quick, easy trade. Euro CAD, same thing. That was H1 M5 mean reversion from, that was also an ADR hit the previous day. So if you got in on the ADR, you probably got a second on and out on that one yesterday. And Euro New Zealand closed out this morning. Again, that was the H1. I think that was an ADR as well. 255. Oh yeah, that was 200 ADR, wasn't it? That was a massive one. Yeah, it was 175 ADR. So there was an ADR reversal and obviously H1 M5 mean reversion entry there. Closed that one out this morning. I closed that out here. My target on this trade was here, basically. Hold on. Here. Yeah. So my target was here, basically. Right. We tapped down into pretty much the target, missed it by about 4 or 5 pips or something, and then started to pull away. So I was watching this morning while I was lying in bed watching the news, and it started to pull away. So I decided to close it out manually because it was so close to TP. What I was looking for with that TP was a pullback into this propulsion gap and potentially this propulsion gap to act as a bounce point. So basically previous resistance becoming support, and that propulsion gap is the move that broke the high. So this is where we're likely to meet buyers if they are going to go for a second leg up. So I decided to get out of that one this morning. Still nice. It's 0.5% profit. So so closed a fair bit of euro yesterday. Oh, you get. DAX is whipsawed. So hedged on the DAX. My God, look at that. Slippage again. So hedged on the DAX. So same situation as yesterday with the DAX. This is what happened yesterday. We got whipsawed at the open. Stopped out on the short. Profit on the long. So same situation as yesterday, just another whipsaw. But one of them, hopefully, if they make a move, will make money. We'll have a look. Right, let's look at today, FX-wise. Is that a normal gap or war influence speculation trading? War influence speculation trading? What's that? Volatile action due to probably grain and oil supply disruption fears. The beauty of the ORB strategy is I don't care. Doesn't matter. We go with momentum, don't we? If the momentum is going to go down or up, we go down or up. What causes it, whether somebody sneezed in the wrong direction and pressed the wrong button or there's a war cracking on somewhere, I don't know. Don't care. Go with momentum. That's the whole purpose of the ORB strategy. There is no bias. It's just a case of you go where the market goes. It's a momentum breakout strategy. So I don't know what's going on. There's no red news about anything to do with grain or stuff. So I did see something about Russia overnight, somewhere to do with something, but I can't remember where it was. Sure, when I was scanning the news this morning, I saw Russia fly past, but yeah, I don't know. Doesn't matter. We're not trading long term. We're in and out, aren't we? So I've been profitable for over a month now. Awesome, Gavin. Good job. That's your first hurdle. Moving from losing or break even to profitable. Just got to keep it going. Backtesting using the power of cloud computing. Cutting my backtesting time down from days to overnight. Amazon Web Services. Blimey. DM me and tell me what you're doing. I'd be interested in that. I have looked into that. It's just so bloody expensive. I've got Strategy Quant. And Strategy Quant, basically, I looked into getting a cloud computer network set up at Amazon Web Services Because basically with strategy quant, the more processor cores you have, the faster you can test. I've got 14 processor cores, I think it is. I looked into buying hundreds of processor cores for a period of hours to do some real big number crunching on RSI strategies and all that sort of stuff. And it ended up, the bill was going to be in the thousands. I would have been able to test something like 20 to 50 million strategy combination system parameter permutations in a day. But I'm not spending $1,000 to do it. It's just not worth it. If I was an investment house or something, or, you know, if I was a hedge fund running quants or something, yeah, worth it. But it's so expensive. If you found a cheap way of doing it, Gavin, DM me in Telegram. Let me know. I'll be interested. And I presume you're doing it with MT5, not MT4, because then, well, I don't know. It's not going to speed up MT4, is it? I don't think. But yeah, I have looked into the possibility of doing that. Anyway, anywho, MT5, yeah. So as many, but you can do that with, you know, you can do that in MT5 already. So in MT5, little trick. For those that don't know, I'll go through this because it is actually quite a decent thing to test in MT5. So when you go into the tester in MT5, you have the agents section, and in their wisdom, this will probably restart because I haven't used this one for a while. In their wisdom, there you go. So that's my machine, yeah? I've got 20 cores, 18 cores usable because it needs 2 cores available, right? So I've got 18 cores available to me. They let you use one MT5. Yeah, this is the whole problem with MT5. They built this new bit of software and it's just shocking. The graphical user interface is terrible. Indicators all conflict with each other. They give you this beautiful thing that can use masses of computing power, but they charge you for it, right? So what you can do is you can actually use all of the cores in your machine to do backtesting, but people don't know how to do it. So what you need to do basically is use the MQL5 cloud network, okay? Which basically means if people are willing to, they can let you use the cores of their machine for processing. So all you do is you set yourself up on the Amazon, on the MQL5 cloud network, right? And you basically make all of your own cores available to yourself for free, because you don't get charged for using your own cores. So there's on the MQL5 website, down here, go down to the bottom, you will find MQL5 Cloud Network. Okay. If you download this application, yeah, here, which is the MT5, no, it's not that one, sorry, it is Strategy Tester Account Agent. Yeah, download that Strategy Tester Agent. Which is this, yeah, which downloads this thing here, right? What you can then do is on the network, you can make all of your processors, see mine are all disconnected at the moment, I can make all of these processor cores available and I can then use them. But it's so complicated to do this. And then obviously you can buy as many as you want. So if I wanted to, I could go and buy 20,000 CPU cores and use them to do a backtest. And the backtest would take minutes, but I would be charged hundreds of dollars for the privilege. And I've done it by accident. I've had a bill from MQL5 for like $70. I'm like, what? But I only did one test. Yeah, you did one test, but you use 6,000 cores to do it. Oh, right. Okay. So you just got to be a bit careful, but that's how you do it. So all of these will then suddenly become available to you because you're putting them on the network, but because they're yours, you get to use them for free. So just if you're using MT5, that is a way to do faster backtesting. Unfortunately, you can't use anybody's data. You have to use whatever data they give you, which, to be honest, I don't find reliable. So I don't use it. Anyway, there you go. Right. That's a whipsaw at the moment on the DAX. It's got absolutely no clue where it's going at all. So there's your 15-minute pre. There's your 5-minute opening range. Your 5-minute opening range broke to the upside. So if you're taking the 5-minute ORB, you are long. If you're taking the pre-market, you are long and short, or you are whipsawed out, whichever. But at the moment, there's just no directional bias whatsoever. So we'll leave that and see what happens when we come back to it. So what my point is with that MT5 thing is it should literally just let you just use all your cores, shouldn't it? Rather than having to download a separate piece of software, put all your cores onto a network so you can access your own cores in your own software running on your own machine. Convoluted, say the least. Adrian, I can use all mine. How can you use all yours? It doesn't let you. How have you done that? Look, I'm not being funny, but if I run a test here now, if I press the start button, I don't know, I have no idea what this is doing. You will see, look, this will come up. There you go, 0.5, right? It's not using any of these. They're ready, but they're not being used. It is only using that one core. The optimizer lets you use all cores. Yeah, well, that's fine. I'm not using the optimizer though. I just want to run a back test. This is the thing, you know, it's so stupid. Like, why can't I use a back test using all cores? That's how you do it. So if you want to run a back test, you've got to do what I said. If you want to run the optimizer, yeah, the optimizer does use all cores. Definitely know that. But you don't use the optimizer. You use a backtest normally. Optimizer is a way of basically curve fitting a strategy into... just shut the program down. No. You shut the program down. Piss off. No, you shut the program down. I'm telling you to shut the program down. No, you shut the program down. It argues with you as well. It's an... Oh, God, I can't stand it. MT5. It's absolutely the most hideous piece of software in the world. Anyway... Got that out of my system. Right, let's have a look at the markets. Now, I've destroyed MT5's reputation. ADRs, none today, dead. So Asia, we've had a bit of a strong Aussie dollar off the back of the figures overnight. Nothing particularly dramatic. The yen is the only thing really we've had any movement on in Asia, but it's happened sort of late on in the Asian session. So apart from that, we're pretty flat. So no ADRs so far today. Weeklies we've covered already. It is Friday, so any of these weeklies, they've all kind of played out, I think, already. So, whoops, euros. So euro odd, that's already played out. I'm in profit on this sell from up here. So that was your weekly hit. In profit, target is here on the top of this propulsion gap. Euro Swiss. There was no entry on that, but if you did take that one, that was that Batman we looked at, wasn't it? So that one, you would have got in up there, out. You would have got in probably somewhere there if you tried to get in off that as well. Euro pound, in and out already. Euro New Zealand, already out. And New Zealand dollar, US dollar. So there's your extension. Entry was yesterday. Actually, no. Sorry. Entry was on, well, 144. So you wouldn't, if you'd have taken the weekly, you would have taken the weekly yesterday because it didn't hit the weekly until yesterday. So you'd have been in here. So you're being in profit on that one at the moment. I took the H1 M5 mean reversion, which is there. So that's currently just sitting break even-ish. So that's all the weeklies. So yeah, there's nothing much else on ADR to look at so far today. But as I say, today could be a big ADR day. We'll see what happens. Franco, sounds like MT5, thumbs down. They fixed what wasn't broken in the user-friendly MT4. Exactly. MT4 doesn't tell you how many cores it uses, but as far as I'm aware, it uses pretty much all of them, because when I run a backtest in MT4, my machine goes, so I know it's using a lot. Yeah, it's like the reason they released MT5 was because they needed a platform that could access the futures market. They were trying to crack the futures market, basically, because you can't trade futures on MT4. But MT5 has direct exchange access to the exchanges. So it was designed so that the futures trading companies could use MT5. What they didn't realize, well, they must have realized, but what they didn't think about was there is way better software for futures out there, like Ninja Trader. God, there's hundreds of pieces of software out there, professional futures trading platforms out there, which are free. And obviously things like Jigsaw and Bootcamp, which are hideously more complex and more powerful and better than MT4 for futures. So they released a program for futures, which nobody bothered to use. So now you've got this MT5 thing, which does exactly the same as MT4, worse, because it's built on a system designed to access the futures market, which nobody trades on MT4. So anyway, I like MT4. Gavin, what spec are you using on AWS and cost? Yes, that's what I want to know, Mumo. And how? Amazon Web Services confuses the crap out of me. It's so complicated. There's so many things in Amazon Web Services. It just drives me up the wall every time I go in there. I set up a VPS at one point, but you can't just go and set up a VPS. You have to say how I want my storage there, and I want this type of storage, and I want you to plug that into that type of CPU, and I want that many CPUs, and then go and get me that much RAM and put all this together, and then put it on a security network that does this, that, and the other. Then go and grab that bit of software and pop that in there. And it's like, I just want to buy a VPS. Too complicated. You have to have a degree in computer science to be able to operate the thing. Yeah, post it in Telegram, Gavin. Don't post links, though, because you can't. Screenshots you can. Or a guide. You can't post a PDF or a doc, but if you want to send it to me, I can put it in there. But don't spend too much time on it. Obviously, you're not being paid. RSI's flat. The only RSI we got is US dollar yen, and that's coming off. So looking at this US dollar yen, this 145 level was the previous intervention. We've discussed this already in here. So the first intervention in the Japanese yen that happened last year happened at 145. We hit 145, bounced. We tested 145, bounced. At this time, they were saying the movements in the FX market are undesirable. Any excessive move in the FX market will be met by force. Market didn't listen, hit 145, tried to test it. They intervened, put in a 500 ADR move to the downside. Yeah, that's 145. Then they said, if FX moves continue against us, we will intervene. They went, all right. And it's kind of like they pushed the button. They were like, yeah, we're going to do it. 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 We're going to sat there for 2 weeks, too scared to go past that level, because they knew that if they pushed it past that level, they could get slammed again in exactly the same way as they did there. And then they let it rally for 2 weeks and went bang, hit them twice as hard, and then went bang and hit them again while they were down. Yeah, this is where we are, 145. 150 is the level they called for final chance. If you go past that line, we are going to shoot you. And they did shoot them. So that's why I'm watching 145. And that is where we are now, which also happens to be a 4-hour RSI extension. But that's not the reason why we're getting this bounce. We're getting this bounce because this is where the market got scared off last time. So we will see if A, they intervene, B, the market has got enough balls to push past this level. We'll find out today, probably. So we'll see what happens there, but it could be the start of the end for anybody that is buying the yen. I was looking at the sentiment this morning as well. The market is short the yen. So there is an incentive. So everything against the yen, the market is still short. We were 97% short We're now 85 to 94% short. So they are scaling out. I just realized I've started that bloody core thing. Sorry, 1 sec. If you leave this running, all of a sudden you find it starts using your cores up. I'm just going to make sure I have got that turned off. Disconnected. And they pay you for that, by the way. If you run that scheduler on your machine, they actually pay you for every test done, but you'll end up earning something between like 3 to 5 cents a day. Right. So the market are still all short. So there is an incentive for the market to go long because retail are short, and retail obviously usually get it wrong. The liquidity provided by retail is always at the highs. So there is a reason for the market to keep pushing. I was interested to see whether or not they'd started to scale out, and they have started to scale out of these shorts, but not massively. So there is an incentive for longs to remain in the yen. So we'll see what happens. And they are looking like they're starting to do it again. Look. DAX stopped out on shorts, so I'm officially long. If they come down and do that gap fill now, I shall be very annoyed. Right, so there's your gap fill done. So that gap there is done. So that one is out of the way now. So there is potential for that movement today. So if you get down to this gap fill this morning, I would look at some buys down there. If we get down there, and that looks like what it's doing. So basically it's just filled that previous gap. Sellers have now stepped in to come back down and get that balanced and then go back up again. Double into stop out. Nothing much you can do about it. But that's what it is today at the minute, by the looks of things. We'll see what happens. So that is your only extension to look at today on the 4 hour. There's nothing on the hourly. There's nothing else on the 4 hourly. So most of the movement at the moment is obviously yen based. Everything else seems fairly flat at the open. Pound's having a bit of a rally against the odd. Pound is rallying against everything. So big strong moves on the pound this morning. We have had news on the pound, but it's been yellow. So that was the GDP figure, came out as expected. So there's not a lot else really to look at today. We're waiting for stuff to get back into movement areas. So if there's anything else anybody wants to look at, let me know. The only thing I'm really interested in at the moment is the yen. So how is H1M5 doing this month? I'm about 4% down at the moment. This account, which is running every pair, is 9% down. Well, I say, how is H1M5 doing? I don't know. It depends what trades you've taken. If you've taken every single trade and done exactly the same drawdown control trades that I have, you're in 9% negative. However, you won't have done exactly the same trades that I've done or exactly the same drawdown controllers I've done. So I don't know what you'll be in, but that's where I am at the moment. Well, I'm not there. This is the live room account. So I've adjusted this down, this one. So from now on, it's taking 0.1% risk across all pairs rather than 0.25% risk across all pairs. So basically, I'm allowing it to trade every instrument. I'm allowing it to go overexposed, but with overexposure of about a third of the normal risk. So the drawdown experienced by the account should be pretty much the same as I would normally experience if I was limiting my exposure to 2 instruments. But I still want to show every trade, basically, because it's good to show every trade, so we can see what everybody would be in. The whole point. Is it good practice to open positions on a Friday? Yeah, it's just a day. There's no Friday's a day like any other day. Market moves on Fridays. People have this thing, I don't trade on a Friday because it's only half a day. I don't know when the market's going to move, and I don't know when is the best time to get into a position. No one does, because no one's got any clue which way the market's going to go. So what day you open a trade on, I don't think has any relevance with anything, is it, really? If, in the old days, going back 10 years, we were scared of holding positions over the weekend because of gaps. Gaps used to be a big problem in the FX market. Gaps don't exist in the FX market anymore. Don't get weekend gaps. And if you do get weekend gaps, they're so tiny. It doesn't make any difference. Banks and institutions hold permanently, then you don't. Yeah, there's a gap. Look, it's the biggest gap you've had that we've seen. Look, it just doesn't really. 10 pips. You don't get gaps anymore. They're not a problem. They used to be a problem. Used to be huge gaps in the FX markets because they were illiquid. There's so much liquidity in the FX markets now. You just don't. It just does not become a problem. That's the only reason I wouldn't trade on a Friday, and I didn't used to trade on Friday. I always tried to be flat. And there's some of these prop firms don't allow you to hold over weekends because they're still scared about gaps. But the vast majority of prop firms couldn't give a monkeys anymore because it's in their benefit. It's advantage to them, isn't it? If you go long and something gaps down, they're probably going to stop you out and blow your account, and you're going to have to pay for another one. So why would you not let people trade weekends? Because it's irresponsible. But you're not funding them anyway. You give them a demo account. What does it matter? They're trying to appear to be on your side. They're not. Pound odd, holding, going ballistic. So Aussie dollar's coming down at the moment. So obviously we've got that strength in the pound. So pound odd will obviously be going strong. They're all going strong. All the pounds are moving up. It's only one candle though. We're still inside yesterday's highs. 5, 10, 15 ORB has been tough for me over the last 3 weeks. You will have periods of stagnation. There's nothing you can do about that. All trading strategies have stagnation. Didn't you once say close index positions over the weekend? Indexes, I don't trade over the week. I don't hold over the weekend because I'm intraday. I don't position trade with indices. Yeah, so indices, yeah, I mean, that's why I don't position trade indices. You can't hold indices over the weekend. Indices will gap over the weekend. Indices gap overnight. Yeah, so, weekend gaps, yes. You do not want to hold an index over a weekend. Yeah, look at that. These are overnight gaps as well. So yeah, but that's why I don't position trade indexes. There's 2 reasons. That's one of them. But the other reason is indexes trend. So, we are mean reversion traders. You can't trade a trending instrument like the S&P as a mean reversion trader. You can, but it's very hard, and it's not conducive to making money very easily, is it? So there's just no point. Indices are designed to trend. Stock markets are designed to trend. Companies are designed to produce profit for shareholders, which means they trend. companies have to produce increasing profits to keep shareholders interested. That's why the S&P trends. Unless we have some kind of weird thing going on with interest rates and cost of living crisis and wars and all that sort of thing, in which case then you get into a bear volatile crazy thing where no one knows what to do. But eventually, we'll go back into normal market conditions, which will be a year, 18 months of trending, not conducive for position trading. If you short this on an RSI extension and you don't get out in time, you won't get out. You won't get out. It will just blow your account. It's just not. Somebody asked me in Telegram the other day about it. Why don't you trade them? And I've covered it quite a few times. And again, obviously today, those are the reasons. Look at all the indices. And this is normal behavior. Stock indexes, the stock market is designed to manufacture. It's designed to make money, which is why Warren Buffett and people like that and investors buy the S&P. You never sell the S&P. If you're an investor, you buy it, because as long as businesses are in business to make money, their purpose in life will be to increase their share price. Increasing their share price increases the profitability of the business and increases the shareholders' payouts. So if you're a business, you manufacture your business to show a profitable return, which in turn increases your stock price. This is an index of stock prices. If all businesses are trying to increase their stock price, what do you think indexes will do? They will keep going like this. This NASDAQ in 10 years' time won't be trading at 17054. It'll be trading at 27054, then 3705, 475. It's a number. All it is a number. And it will continue to do that. All stock markets do that. That's the job. They're designed to go up. DAX is a bit funny because I've only got a couple of years worth of stuff, and I've only got since the bear market started, really. But before that, you would have seen the DAX, doing the same thing. So it's a trend trader's dream. Stock indexes are trend traders' dreams. What you want to do, you just buy the dips. That's what I do on the S&P. Buy the dips. I've done it for years. Haven't done it last year because bear volatile markets are not the way to do it. But bull calm markets, which seems to be what we're entering back into now, is exactly why you want to do that. But I'm still not convinced we're in a bull calm market again. We have broken this high now, and we do seem to be rebounding off of it. So target, I think there's probably an argument now for starting to buy dips again. I'd just like to see it kind of kick off properly, but it doesn't seem to be doing that at the minute. We are running to the upside, DAX. So target 1 is all the way up there for me, which is 2R. So if we're going to leave this gap in place today, that level there I would be watching, which is in this propulsion gap, which is 16074 area, 16075. Watch that for a bounce off of that level. That's a previous support turned resistance. So I'd watch that. Other than that, we're looking at ADR basically today. And then 150 gap fill. Conspiracy theories, not trading on a Friday, yeah. Morning, Neo. If you run an analysis and your analysis of your trading history says that you don't make money on a Friday, then don't trade on a Friday. But I think this whole I don't trade on Fridays because the market is crap thing comes from people that are intraday scalping on 5-minute charts. And yes, Friday afternoons are quite often very quiet. So I understand that. But if there's a reversal alert on an H1 RSI extension on a Friday afternoon, I'll take it because I'm trading the RSI on the hourly chart. Yeah. So if this thing has, for example, pushed up to there and I've got an reversal alert on the 5-minute chart at 3:30 in the afternoon on a Friday, I'm taking it because I'm taking an hourly RSI extension with the view that they are going to unwind that long position. They're not going to unwind it till Monday or Tuesday. So I still need to get into it. If I don't take the trade on the Friday afternoon because it's a Friday afternoon and I don't want to hold it over the weekend, on Monday, this thing, when it's got back down to there and I wake up and see it, I've missed it, haven't I? Yeah. So if you're in today intraday trading, I get the Friday thing because it is quiet on a Friday afternoon. But watch Friday afternoon this afternoon before the 4th of July when it's the last trading day of the quarter and the month. I don't think it's going to be a quiet Friday. Therefore, anybody that's going, oh, I'm not going to trade this afternoon, they're going to come back and go, Jesus, what happened to the market? It swings and roundabouts, isn't it? There's just get in, deal with it, and get out. You don't need, if you set all these rules, you'll never trade. I don't trade. I'm going to sit on my hands on Monday and see what the market does. So where are we? Friday, Thursday, Tuesday. Wednesday, Tuesday, Monday. I'm going to sit on my hands today and see what the market does because I'm waiting for the midweek reversal. So I'm going to see which way they take the market on Monday so that it gives me an indication as to where we should be doing the midweek reversal on a Wednesday. Tuesday undid everything. That's confused me. It looks like we're going long. So I'll take the midweek reversal short on a Wednesday. So I'm just talking about, this midweek reversal strategy that everybody in Smart Money Concepts goes on about. Thursday it just went sideways, and I wonder where it's going to go today. See what I mean? Why won't the market go parabolic on a Monday? Yeah, if the market has got a load of stock orders to trade on a Monday, it'll trade a load of stock orders on Monday. If on the Wednesday, Nike releases their figures and it's massively bullish, it'll go massively bullish. No, it should be a midweek reversal. Why? What's Wednesday got to do with anything? Every time someone has come to me with that concept, I have shown them a thousand instances of that concept not working. And then they will come back and say, yeah, but look at all these ones where it did work. So well done. You just flipped a coin. You got heads and I got tails in equal amount. Now do you understand that there's a 50-50 chance every time you press the button of it going up or down? You've got no clue which day anything's going to do anything. And if you try and predict it, you just get yourself into an absolute mess. Because you'll find, again, I have nothing wrong with people that believe in astrology and astronomy and all this sort of stuff. But the people that come to me and say, have you traded on the 7th day of the month? Go back and test it on the 7th day of the month because it's lucky in Hong Kong. The market always starts at least a week's worth of movement. I'm sure it does. But I can show you 1,000 examples in the past on the 7th of the month where it went sideways for 3 days and then rallied. Does that still count? It's just utter rubbish. Everything to do with anything, trying to predict anything in the markets is just rubbish. The only thing you need to know about is structure. Yeah. When buyers have taken control, go the line with where they're going. When the buyers have been rallying for absolutely ages, you know they're going to have to take profit on those moves. So get in when they take the profit on the moves. That's all you need to know. You need to be able to understand how the thing works. Nothing can predict where it's going. You just need to understand how it moves. If you understand how it moves, you can predict how to make money out of it, but you'll never get it right. Because even if you get a lovely W pattern reversal there, if you get 3 companies in the S&P 500 who are in the top 10 all releasing negative profit figures, it's coming down. Forget what that W pattern reversal said it should have done because they should be taking profit on that. If something happens and it goes down there, it's going down there and you're going with it. You just need to deal with it and understand how to get out of it when it goes the wrong way against you. Nothing can predict when it's going to happen. Timing is virtually impossible. However, there are things like when the Japanese hark on about the fact that they are going to intervene if we do not do as they say. Yeah, those things we can predict because we've seen in the past them saying this. And every time they've said this in the past, if the market hasn't done what they wanted to, they've done something. So there's fundamentals you can predict. The pound should rally over the next month because interest rates are going up by 1 to 1.25%. We can predict that. And that's what the buyer scorecard does, is it tells you what the fundamentals say should be happening at some point, but it can't tell you, nothing can tell you. The COT report can't tell you when it's going to move. Fundamentals can't tell you when it's going to move. They can give you an idea of direction, but they can't tell you when. So Friday, Wednesday, or Monday doesn't come into the equation. At some point, it's going to go down for a couple of weeks. You'll be buying it while it's doing that. And then when it goes, you'll get out. Because you know that the market's going to move. That's what I mean. You understand the structure, the way things move. You know how to make money. If you try and time it, you'll fail every time. That looks like it's exactly where we should be going short. Is it going to? Are the US going to rally today? Are they going to annoy the Japanese again? 4th of July, we have coming up. Next week, obviously, because it's July. Next Tuesday. So we've got bank holiday in Canada on Monday, and we've got bank holiday in the US on Tuesday. If you were Japan and you were thinking, when is the point of least resistance to intervene in this market, where would you pick? Wouldn't that be a lovely thing for the bankers to wake up to on the 5th of July with a hangover? The yen going 300 ADR against their positions. Okay. I can't predict anything, but you know, there's certain things you can look at and go, well, that makes sense. It's logical, isn't it? It's just logic. Rejecting at the moment, big old wicks to the upside at the moment on the DAX. We are rallying, but we're meeting a little bit of resistance on the way up here. Still got 35 points to go to get 2R on that. Right. Anybody got any other pairs I want to look at? There's not a lot to look at, to be honest, but if anybody's got anything, let me know. Only trade between 10 and 10:15 on a Friday, on a Wednesday. Yep. You know, not to hark on about it, but this, you know, the whole ICT kill zones, you know, I don't even know what it is. It's a 2-hour window or something, isn't it? You only trade in that 2-hour window. And, you know, that 2-hour window encompasses when London will start their moves or New York will start their moves. Why do you think he gives a 2-hour window? Because he hasn't got a clue when it's going to happen, which is logical. Yeah. So let's go somewhere between 8 and 10, because we know that the banks open at 8, people get into the offices, they go and get their coffees, they sit down with their donuts, and at some point they're going to need to press the button to execute the overnight orders. That's when the market's going to move. Whether it's some 8:05 or whether it's 9:55 in the morning, nobody knows, apart from the guy in the bank sitting there with his donut drinking his coffee. So pick a window. Yeah, only trade during those times, unless there's a news event that happens at 10:30, in which case that's when the bank's going to move it. So what you're going to do? Not trade because the news event's at 10:30 and the guy's decided to sit there drinking his coffee and have another donut. You get in when the market moves based on the signals and strategies that you have. And if a strategy tells you you can only trade in 2 hours a day, fine. But if nothing happens in that 2 hours a day, what are you going to do? Pay your mortgage with thin air? Just doesn't make sense to me. But anyway, people do it. Facing the North Star. Yeah. So I can't remember. It was something to do with moon cycles. Somebody got in touch with me about 6 months ago. They sent me this PDF document, and it was huge as well. And it explained about how the moon cycles affected the FX markets. And could I develop an EA based on moon cycles? And I didn't want to be horrible about it, but I was like, are you serious? Totally serious, this person was. convinced that the cycles of the moon affected how the currency markets worked. It's almost as if the bankers turned into werewolves at a certain period of the month, and that's when it all happened. It's like, okay, you go off and you trade that, come back to me and let me know if it works. I'll be very interested. What's next? The Twilight EA. Why is it called the Twilight EA? Because the vampires control the FX market. Only when the werewolves aren't there. Come on. It's driven by bank movement. If they've got 25 million going long and 10 million going short, the candle's going up. That's it. That's all that makes this thing move. And nobody on this planet knows who's got more money than the other one until the candle's painted. It's true, though. People come to me with the most amazing systems. And a lot of them are based on just stuff that you look at and you think, is this a joke? Are you just trying to waste my time? But there is people out there that follow it. It's amazing. If it was easy, all the kids would be doing it. Yeah, most of the kids are doing it. Don't forget Franco, though. They've all got Lamborghinis. They're all 18 years old. They all know way more about everybody else to do with the markets because they're 18, they've got a Lamborghini, and they've developed a course. So they know everything. All the kids are doing it. I think I told you, my wife's cousin lives in Australia. His son, who's, I'm not sure how old he is. He's sort of teenager years. He's interested in trading markets. And I told him, you know, honestly, what it's like here. Because he'd seen some videos, I think, on TikTok or whatever, showing him how much money he can make out the crypto market by a kid that's probably 17, just left school and become a millionaire. No, his parents are a millionaire. His parents own a Ferrari and a massive house. And he just stood in front of it and went, I've made a course. The problem is most are degenerate gamblers providing liquidity for us. Exactly. You're diabolical, but probably right in your assessment of the yen. Yeah, well, it's true. That's the way it works. They have to defend their country. It's war. This is war in the FX markets. And, you know, everything like the pound. I want the pound to go up. Because as that happens, especially the pound US dollar, because when the pound goes up against the US dollar, everything I buy in US dollars is better. So, you know, you've always got the banks and central governments and everybody have got a reason they want their currencies to rise. But if they rise too high, it becomes detrimental for trade. So you have to have a balance, which is why it goes up and down all the time over long periods, because you've got to have that balance. If you don't have that balance where it's good for you, bad for you, good for you, bad for you, good for you, bad for you, yeah, you'll find it very difficult to do trade. Yeah. Buy cycle, sell cycle, buy cycle, sell cycle, buy cycle, COVID, buy cycle, sell cycle, buy cycle. Yeah, that's just how it always happens. As long as there's a buy cycle, there's a sell cycle coming. Your job, if you choose to accept it, is to pick the low of the buy cycle. If you can't pick the low of the buy cycle accurately because you can't read the future, you just have to get in and wait. Patience. Obviously, don't do it on the daily because you'd be waiting for years. Did you ask which drugs they're taking? No. It's true though, isn't it? I mean, there's just people believe the weirdest things. I live in the UK. We're a very conservative country. And when people come to you saying that they've got a system or strategy based on luck, on the number 7 and the astrological cycle of the moon, my British brain cannot compute. Just doesn't make sense. Like, do you hear what you're saying? Yeah, but they're so convinced. So convinced. Anyway, what can you do? I can't even develop a strategy on it because there's no indicator out there that tracks the moon. I'd have to build one. I'd have to get some coder involved that is above my pay grade for coding to build something that tracks the cycles of the moon. Maybe need to get NASA involved. Wouldn't that be an EA? The NASA EA. Why is it called the NASA EA? It's developed by NASA. That would sell. People would buy that, wouldn't they? in their droves. Picture of me standing in front of a Lamborghini and the Mars rover with a NASA sign behind me, holding my laptop. That would sell millions. And a picture of the moon. Friday. This is Friday. This is what Friday trading is all about. Waiting for the market to do something. But look, we have got a lot of volatility today. Yeah. So there's the pound US dollar over the last 2 hours. Yeah. There's a lot of volatility here at the moment. So we may get some decent movement. But right now, there's just no opportunities anywhere to look at. So I think we need to wait for New York this afternoon and see what that does. But just if you trade in the DAX this morning, just bear in mind we have got that gap that we were targeting and waiting to fill done now. And we have left in our wake a target to the downside. So we are stuck between a rock and a hard place now. Very difficult. But it's certainly rallying long. So if it can continue to do that, that would be lovely. That's what I shall do. I've got nothing else really for this morning. So all the markets are waiting. So I'll be back this afternoon at 2:20. We'll have a look at the US markets. News-wise, obviously, just be aware that we've got no, we haven't. That's next week. We've got GDP for the CAD at 1:30. We've got PCE for the US dollar at 1:30 as well. So we have got two catalysts. If they're going to move it, I would expect that's where they're going to start the movement from. So we'll see. It may be absolutely nothing today, but be prepared for a big day. We do often get big ADR days on last day of the month, and especially last day of the quarter as well. But they may well have already done it. So if they've already done the movement that they need to do, there's no need to move it, is there? They'll all be down the pub getting drunk. So, but we've had two sideways days, which kind of is weird. End of the month, you'd expect some movement. A lot of this stuff we've had very little movement on, so might be a big one. Mumo, ever tested the ORB on the Nikkei? No. A lot of people have asked that. I don't trade it, I don't have it, and I'm not awake for it, so I've never tested it. But if you want to test it, test it. Obviously, you can leave it unguarded, obviously running overnight, but I don't know what the liquidity is like on the Nikkei. So the open is 3 o'clock, 3 a.m., which is 1 a.m. UK. Yeah, 3 o'clock broker time. That's your open on the Nikkei, which is 1 a.m. UK. So also seems to pick up volatility at the New York Open as well. Doesn't seem to pick up volatility at Frankfurt. So yeah, I mean, all you can do is back test it. So there's your open. It's going to do the same as, all indices are going to do the same. So there's your open. So that's your opening range candle there. That's your opening range breakout. Bang. But other days you're going to get whip. The thing with the indices is it's all to do with the stocks. Yeah. So there's your 3 o'clock candle there. So that is your opening range that day. That's huge. Look at the size of that. So that's your opening range candle. You got entered short, flip long. Again, look at the size of the candle. To actually make a 1.5 hour of a candle range that size, very, very hard. It's got to go a long, long way to get 1.5 hour in it. Not conducive. But your pre-market 5 was a trigger long, stop out long, trigger short, happy days. Your pre-market 15 was long, short, might have hit 1.5 hour. Same thing. You're going to find exactly the same thing. All you're doing is you're adding another instrument to your portfolio. So it gives you 5 to trade, doesn't it? but it does the same thing. The volume is there. You can see it's obvious when the volume comes in. It's 3 o'clock in the morning. It's that candle there. Look at that, beautiful ORB. That one there, terrible ORB. Awful. Same thing, isn't it? You're going to get exactly the same type of trading because it's to do with the stocks. And it's basically a case of when that bell rings, it goes or it doesn't go. So they either have a large stock portfolio or set to purchase to make, and they will make it and it will rally, we'll get a trend day, we'll make a load of money, or they won't have a set to purchase or a big buy to make or sell to make, and it won't. And that first 5 minutes will either be massively volatile or it won't. You know, and this is kind of like, this is exactly what I always say in here. Yeah. You have no way of predicting what will happen on any candlestick ever. Yeah. If a bull candle is painted, the odds of the next candle being bullish or bearish is 50%. Yeah. Just because that was bullish doesn't mean the next one's bullish. Just because that's bullish doesn't mean the next one's bearish. There is nothing to determine when a candlestick closes what the direction of the next one will be, apart from movement in the market by buyers and sellers. And when this market opens in Japan, you don't know how much stock purchasing or selling has to happen in that first 5 minutes. But the initial cash balance, we know, is a batch of orders that is executed from the non-speculative participants. So it's the guys on the desks, on the dealing desks, that have been told to buy X stock or sell X stock or sector because their customers have requested it. Once that initial opening cash balance, which will last as long as it lasts, depending on the size of the orders, 5 minutes, 15 minutes, whatever, after that, then the speculative traders take over. The bank and institutional traders, that's job is to make money out of market movement. They will drive the market based on profit and loss that they're making. So that's the whole purpose of the opening range breakout. The initial cash balance is either in the direction of the speculative traders or it's not. You have no way of telling it. That's why it's a momentum breakout strategy. You wait for the momentum breakout and you go with it. Same with the DAX this morning. All I've done this morning is gone with the momentum breakout. I had no clue whether it was going long or short today. I was hoping it would go long to get that filled because that would be a nice easy long trade, but it decided to go long, so I'm long. Yeah, I'm not clever. All I've done is gone with what the market's doing. And the yen, the Nikkei, the DAX, the Dow, the S&P, the NASDAQ, any index in the world, the FTSE, they all do the same thing. They have an initial open where the bell rings. There's a massive injection of orders based on overnight orders by their customers. Banks, their job is to execute trades on behalf of their customers, yeah? So I phone up and go, Barclays, I need to sell all of my stock in British Telecom, please. They go, okay. When the bell opens, we'll sell all your British Telecom stocks there, yeah? And they do that for 200,000 people and 50 massive institutions, pensions, hedge funds. That's the initial cash balance. After they've pressed those buttons and they've gone, right, all the orders are done, guys. Okay, brilliant. Let's make some money. That's when that starts to move. Yeah, that's how it works. And this is why you're stupid if you try and predict anything at the open. Like, you know, I know gaps get filled. Is it going to fill today? I haven't got a clue. Because if they've got a ton of buy orders on there for everything in the Dow and the DAX today, it's not going to get there, is it? Because they're just buying stuff. However, when they've finished buying, they will come back and sort that inefficiency out, because at that point there are a load of people selling and buying. Some of them have got left behind with an open order, what they call open interest in the market, and they are now imbalanced on their books because they need to come and close those orders. Whether you buy, you have to sell. And if you have bought, or rather in this case, if you have sold and it gaps up, you can't execute the opposite side of your order without making a loss. So you get the market to drive back down to complete that order. It's what they call an inefficiency, or in the banks, they call it unfinished business. That's why gaps get filled, because of unfinished business. They'll have the banks have unfinished business books. It's all very orderly, and everybody thinks, oh, it'd be amazing to be a banker, a stockbroker, all this sort of thing. When you actually get into a bank, it's boring and mundane as any job is. Basically, you sit at a desk with a computer. You get we used to get a load of paperwork come with orders that needed to be executed. It's obviously all done algorithmically now, but it's not exciting. It's a case of we have an unfinished business to the tune of 2.5 million at 159.57. Okay, no problem. We'll just get the market maker's desk to take it down to 159.57 later today, get that sorted, and then obviously execute the next batch tomorrow, which is why I say in the bootcamp, that's why we have sessions. You have the Asian session where you have Barclays trading. They pass to London and tell them whether they're balanced long or short. London will then take it long or short based on how they will make money for the day. When they finish, they will have a book balance positive or negative. They will pass to New York. New York will then do what New York needs to do. But it's Barclays passing to Barclays, passing to Barclays. HSB's passing to HSB to HSB. The market operates 24/7. So you need 3 offices, 1 in each time zone. It's the same with the stock market. Yeah, except the stock market closes. So therefore you have overnight, you have this brick wall you hit where everyone goes, I want this, I want this, I want this. And they go, yep, no problem. We need to execute it though when we open. All right. It's like you queuing up outside the door of a shop waiting for it to open. As soon as it opens, everyone floods in and everything happens. That's what the opening range breakout strategy takes advantage of. That backlog of orders where you get explosive moves. That's why that volume spike happens, because the market's shut. So what happens at the open is you get all that volume executed within 10 to 15 minutes, 5 to 15 minutes. That's why they call it the opening cash balance. So it's where have we traded? Okay, brilliant. So are we going to trend today, or shall we just stay and trade around this price? Rotation day or trend day? No clue which one it's going to be. But when it is a big trend day, that's where you make your money. That's what the ORB EA takes advantage of. It's a long-term edge. And as Mumo's just said, you're going to have periods where it just doesn't work, because if they go into rotation for 5 days on the trot, you are not going to make money for 5 days on the trot. But if they go into trend for 5 days on the trot, you're going to turn around and go, holy crap, I just made 35 grand. Because you'll make 5 grand a day every day, or 3 grand a day every day, or whatever it may be your targets are set at. Because if it trends every day, you make money every day. But the only way you're going to find out if it's going to trend every day is to take the trade, because you can't predict when it's going to trend. Just because yesterday was a rotation day doesn't mean today's going to be a trend day. Yesterday on the euro yen was a rotation day. The day before it was a rotation day. What's today going to be? I don't know. Could be a rotation day. Could be a trend day. But if you think it's going to be a trend day, go short now. And then you've got a 50-50 chance of being right on the trend day. Yeah, everything has a 50-50 probability. So to answer your question, Mumo, well, that was a hell of a big answer to a question, wasn't it? But anyway, no, I haven't tested it on the Nikkei, but you'll get exactly the same results as every index. So if you fancy it, do it. Morning, Michael. Farmer's Almanac Forex method. That would be amazing, wouldn't it? What you want is the Sports Almanac method. So you need to go into the future, get the Sports Almanac for every sporting result, or rather you want to steal the Financial Times or whatever. Anyway, just want data, don't you? You want to know what's going to happen in the future. That's all we want. Amy, thanks. For the first time, I understand why gaps appear. Yeah. That's all it is. It's just when the market's shut, that's all it is. It's just a build-up of prices. all the stuff you see. So if you trade on my Forex funds, for example, my Forex funds are one of the brokers that paint in this data. So you will have candles here 24/7. It's running all the time. But the actual data that you see from the broker is an estimate of what's happening in the market. So they know roughly where it's going to open based on what orders are queued up, if you like. But the orders have still got to be executed, and they don't execute until the market opens. The electronic exchange in Frankfurt opens at 7 a.m. The dealing desks open at 8 a.m. So when the electronic exchange opens, you get order executions. But they're not the batches or the big orders. And that's unfinished business. That's people. And I always say the word people. I shouldn't. It's institutions caught offside. But the thing with institutions, banks, is they have the power to move this. If they want to move any instrument, they can do, because they've got so much money. If they decide we need the euro yen at ADR today, they can put the euro yen at ADR today by just simply selling tons and tons and tons of euros and buying tons and tons and tons of yen. It will force it down there. It will cost them millions. But when it gets down there, everybody that's been buying it, i.e. if they're going to sell it, they have to buy it from someone. Everybody that's been buying it, when it gets down here, when they stop selling it, they're going to take advantage of the move, buy more of it, and then they're going to sell their orders, which is why you get market structure. Because you have to have the opposite thing happen for the people that did that to make money. Yeah, it's exactly the same, right? I'm short here. To make money, I have to buy it somewhere lower than I shorted it. So if I sell it here, I've got to buy it here, and I make the difference. Every banking institution is exactly the same as you and me. When they sell it at a level, they have to buy it at a lower level. If they buy it at a low level, they have to sell it at a higher level. To do that, they need the market where they need it. So they are lucky enough to have 3 different dealing desks in the banks that can move it. The market maker desk, the speculative desk, and the commercial desk. Yeah, each has their own purpose. The market maker desk can inject money into the market to move it anytime they like. And the market makers execute on behalf of institutions. They farm orders out from lots of markets and execute them for them. The commercial desk, their job is to execute commercial client orders. So Microsoft, I always use them as an example, say we need to buy 25 billion yen with our US dollars because we've got a big transaction happening with a Japanese company. Commercial desk will execute that order for them and convert their US dollars into Japanese yen so that they can pay the invoice. The speculative desk are the guys like you and me sitting there going, right, which way are you moving it today? We're going down because we've got a load of sell orders on the commercial desk. Okay, so we will sell. The speculative desks are selling in the knowledge of knowing which way the market is going to go, because the commercial desk have got to sell a load of US dollar and buy a load of yen. The market maker desk have got a queue of sell orders on the US side. They can see exactly where the market's going, which is why banks cannot fail to make money. So what they do is they say, give me your 5,000 in savings. We will pop it into our big pot we trade the Forex market with, and we will give you back 0.25% interest on everything you give us, while we are making 25% on your money. So if you want to make money in this industry, and that's the advice I gave to my sister's cousin's son, if you want to make money in this industry, become a banker. Because they're the only people that can move this thing. The only people that can make money on it guaranteed are the people that know where it's going. Thanks. Hopefully now everybody understands that you've got absolutely no hope in hell of picking a direction in the market. Just deal with it. Can we, with the current ORB, set the distance from opening range? Let's say if next candle moves above or below 5 to 10 pips, take the trade. Yes. So you have the pending distance. So where's your offset? Down here. Yeah, there is offset distance. So offset distance for pending orders and break even. So that decides, I've got it set to 0 on this particular one, but that decides how far away from, let's say, that line there, the opening range breakout 3 in this case, that decides how far away your order is placed. The other setting that you have is the percentage of opening range to use as a stop loss is set to 110. So that will basically be 110% of the range will be used for your stop order. Yeah. So, but for pending orders, I would always advise you to set it at around about 10 to 15, depending on your broker and how many digits you've got after it. But set it, you know, kind of somewhere around there, because what happens often is when you get that, whatever the range is that you've set, the 5-minute ORB, the pre-market 5, the pre-market 15, whatever the range is, you will often find market will retest those levels because that range was formed by sellers driving price away and buyers driving price away. So when you come back to those levels, if these guys are still in the market, they will probably sell again at those levels, which is why you find double tops and double bottoms sometimes appearing at the open. I'm just seeing if there's an example. On here, there's not really. Wasn't one today. Wasn't really one, but you will find sometimes you will get that initial the initial 5-minute OR opening range candle will hit the pre-market range high and come away from it. So if you set your order there, like basically whatever your spread is on your broker, yeah. So if your broker gives you a spread like that, you want your offset to be larger than the spread that you typically get. So if you've got a spread, a broker like mine that gives you pretty much the same spread all the time on the DAX, I set it to 15, which means that if we double top, the ask is going to be spread above that candle high. It won't trigger the order. If you want to go further than that, obviously, and it just pokes out the top and just pokes out the bottom, that won't get you in. But obviously, you're entering later, your stop is further away, therefore your target you have to reach with your risk reward is further away as well. So a later entry is a lower lot size and a further target. So you don't want to spread it too far. But again, test all this. Back test it. Go and test it all. There's no right or wrong. It's just what it is. I'm just going to close a little. Actually, I'm not going to close a little bit. I'm just going to move my stop. So I'm just taking one of the stop losses there on one of the orders, just to lock in a bit of profit in case we do drop off of this, because this is quite a sustained rally we've had now. So as you can see, we've just broken out that accumulation. When we started to move, little accumulation broke. We're accumulating here for the last 15 minutes. We haven't gone anywhere. I'm just worried about a big pullback. So I'm just going to lock in a bit of profit because I've got some loss this morning. So it's 840 in loss. So just locking in basically a break even. Right. Anyway, I was going to go, wasn't I? Have to count the spread. Yeah. Mumo is loving the DAX. You might not be loving it in a minute. It looks like it wants to come down. It's stuck. Again, if you're trading now, if you're not trading now, let's say you're flat now, right? You can do all this with the Price Action Toolkit EA if you want to get that. But that's a lovely little range. Yeah. So there's one of two things going to happen. We're either going to rally up and go for that gap. We're going to rally today. It's just going to become a lovely trend today and we're off we go. So take a break of that high. If we're going to pull back, take a quick short scalp, maybe into propulsion. That's your initial opening range high here. So it might pull back into there. So you always, every time you take a trade, think, where is this going? Don't think, where am I going to put my stop? Where am I going to put my target? Think, where's this going? Is there enough room to get into a trade? If I go with a stop there and an entry there, and it only hits that propulsion gap, is that enough money based on that stop? Probably 1.3 or something. Not much. If it comes back and tests the open and then bounces off, that's a nice little trade. If it comes down and hits the gap fill, happy days. Always think, where is it going? Your job is to predict the future. You can't see the future, but you have to think, well, what are the options? That propulsion gap getting filled, we know that because propulsion gaps get filled. That propulsion gap getting filled at some point is highly on the cards. A retest of the open, which is where we started the rally from and the buyers started, is on the cards. If we get back down to there, if these buyers are still long, they'll add to those positions. If there's a massive amount of selling pressure, we're going to get that gap fill done. Okay. You've broken long. So where are we going long? Gap fill. Riding it with a trailing stop. Try to hold on as long as possible. Yeah. Yeah, ride it with a trailing stop. If you're going to use a trailing stop, whenever I add a trailing stop to anything, I just look at what the ATR is roughly. I don't look at the ATR, but I look at what the average candlestick size is at the moment. So exclude whacking great big boys like that, but look at the size of that candle, the size of that candle, the size of that candle, size of that, size of that, size of that. What are they on average? I don't know, something in the region of 112. That one's 120. That one's 110. So if you're going to stick a trailing stop on it, make it 120. 12 points. So if you put a 12-point trailing stop on it and it pulls back and does a bit of that, you'll probably survive. But if it rallies like crazy now, you'll go with it. Kind of like a tight parabolic SAR. If you imagine if you had the parabolic SAR indicator on there, parabolic SAR is brilliant for trading stops. If you use, I hate trading stops, but I'd rather just move it manually. Yeah, so I'm sitting there at the moment, and I'm going to leave it there. I'm not going to touch it now because that candle's pushed up. Doesn't mean I'm going to move my trading stop up to there because it's probably going to do that, isn't it? If it breaks that low, though, I'm possibly interested in getting out because if it breaks that low, it means there's more bears than there are bulls. In which case, we might be starting to move to the downside. So just use your head when you use the trailers. Did some stupid stuff with the Price Action Toolkit. Had to stay off it for a while. Somebody contacted me yesterday or the day before and was very excited. I don't know if he's in here, but about a set file he'd found with the Price Action Toolkit. And it was absolutely amazing results. $9,245 profit on a 10K account in June. So in 1 month, it doubled the account. Fantastic. I put it on a back test for 3 months, starting 2022. Profit curve never got anywhere near. It just lost 15 grand in 3 months. Got to test long term. A month is nothing. If you took the opening range breakout on a month and tested it for 1 month, and it just so happened that 15 out of 20 trading days that month were trend days, the results on the opening range breakout EA backtest are going to blow you away, and you're going to think, I've just found the holy grail, because it would have only lost 5 days if there was 15 trending days in the month. Do it on the month before, where there was only 2 trend days out of 20, and see what the results were. And you're never going to get 2 trend days out of 20. That's rubbish. But you get the point. You've got to backtest over a long period of time. and encompass all market conditions, all market regimes. You need to make sure that whatever you're trading has an edge, that it's not going to win all the time. Your edge is never going to win all the time, but your edge has to hold its ground when the market conditions are not right. So if you've got something that wins an absolute fortune in a trending condition, but in a range-bound condition loses an absolute fortune, that's not going to be a long-term edge. If you've got something that milks it in a trending condition and in a range-bound condition, it loses some money, but it doesn't collapse, like lose a lot of money, that's an edge. Because what's going to happen to your profit curve is those lovely big winners, those months and weeks where it's not good, those lovely big winners, the bits that aren't good. So you've got to make sure that the bits that aren't good are like flags, not like that. That doesn't help anybody. So if you've got something that works brilliantly in trending, but is collapsing in a range-bound market, there's no good. Thankfully, because of the way that stock indexes are created, they trend more than they range. So you get more trend than rotation days. That's where the ORB edge is. The fact that on these days, when you hold them, you have to hold them, you're going to kill it. Every single one of these trades that hits both targets makes over £3,000 a day, $3,000 a day. So you just got to hold the big ones, hold the winners. Don't get too excited when you see a month's worth of testing. I never test anything over a month. The minimum back test I ever run on anything, regardless of what it is 6 months. And unless it's got a 6 months worth of that looks interesting, I'm not interested. A month is just 3 months. It's just useless, utterly useless. Look at the S&P. You know, look at what we've been talking about this morning with the S&P when it trends. If you test the strategy when it's doing that, let's say this is a month. If you test it and it's a trend strategy, that's going to go, oh, and then test it in a trend strategy like that, it's going to go, not too bad. Then test it in a month that does that. You're going to get the same result there, roughly as you are there. It's not as nice, but it will still make a profit. That's going to give you a completely different result. So you need to pick a test period that you can see there's a lot of different movement so that you can test that whatever you're doing survive. It doesn't have to make profit. Like I say, you're never going to find something that makes profit in every market condition. It doesn't exist. But you've got to hold your ground in those bits. That's what you've got to do. So you've got to test long periods. And unfortunately, on 5-minute timeframes, it does take a long time, which is what we were talking about earlier with Amazon Web Services. If you can speed up days of trading, days of back testing into hours of back testing, it's going to help you a lot. Is there a good broker just for use to use it for back testing? No. The best thing you can do is buy tick data. You have to cobble this together. So I use Robo Forex because Robo Forex give me a virtually fixed spread on the DAX. So you see my spread line. You probably can't see them because they're grey, but my spread lines on the DAX will never get bigger than that, and quite often they're like that. Yeah. Virtually all the time. So I know if I use a 2-point spread in this back tester, I know that is going to encompass 95% of my trading conditions with Robo Forex. Slippage, I have no idea. You can never simulate slippage. Today's slippage on the DAX, you saw it in real times, happening there, didn't you? The slippage on the DAX this morning. Both of these orders should be at exactly the same level. They're not. Both of those sell orders there should be at exactly the same level. They're not. In the back tester, they will be. In real world, they're not going to be. So you need to test with what you experience trading with that broker. You can't guess. So you have to trade with the broker, find out what that is. Then go and get tick data. So download tick data suite. You've got to buy it. but you then download tick data, which is accurate. Dukascopy are probably the most accurate I found out there, but most brokers have got pretty good data. The big boys, IC Markets, FXCM, Darwin X, Dukascopy, there's loads. I mean, there's most of them are in here. Alpari, very good data. FXCM, Darwin X. I would say out of all of them, Dukascopy, FXCM, or Darwin X, those are your three. Darwin X haven't got quite as much data. They only go back 10 years or something. But those guys all got good data. And then just put your GMT offset in. So whatever the broker is, so it's +2. 99% of brokers are GMT +2. And then you set your spread for whatever you experience with your broker. So with this broker, a 2-point spread is good. If you want to test slippage, do your back tests again with a 5 spread. That will simulate slippage on every trade. So if you do a back test with the normal conditions you would expect to get from spread and it's profitable, and you do the same test with a slippage of 5 instead of 2, that simulates you not getting the entries that the backtester gave you. If they still come out as profitable, you know that even if you get slipped on every single trade, which is not going to happen, you are going to get your executions roughly where you want them. And sometimes, like you saw this morning, I might get positive slippage. Unfortunately, that was on the one that stopped out, which still helped me because I didn't get a full stop out on it, did I? But test it like that. And if you still get a positive result, you know that that's a robust strategy. Slippage tests are very important. If you've got a strategy scalping on M5, it's critical that you get those trades on at those levels, because the difference between getting a trade on there and risking $500 on that and getting a trade on there, that is $750. That's a 50% increment in your loss. Yeah. If you get slipped by that much and your stop loss is that tight. Yeah. If you're using wider stops, it becomes the wider the stop, the less slippage affects it, which is why, again, I said this yesterday afternoon, the vast majority of people you will see that are profitable in this market are not looking at any time frame lower than the hourly, me included. The only strategy I trade on M5 is the ORB strategy, because I know there's an edge in it. Every other strategy you trade on M5 is going to be very difficult to make profitable because it's just chop. Hourly, you're not going to get affected by spread. You're not going to get affected by slippage. You're not going to get affected by the market going like that for 3 or 4 hours on the trot, because all you see is an accumulation. If you've taken a trade, you're not going to get stopped out. You're not going to hit your TP. When the market is going like that on M5, you're in, you're out, you're stopped 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 out, your account's blown. All I've been doing is watching this thing go sideways for 6 hours. You silly M5 traders have blown your accounts. So back testing, any strategy you develop on back testing using the hourly timeframes, H1 M5, H4 M15, they're trading and executing on the M5 and M15 timeframes, but we're trading the hourly RSI and the 4-hourly RSI. So we're trading the high timeframes. We're just executing entries on low timeframes, but our strategy is based on hourly movement. So they're safe. Because we're not using stops that are, I mean, we're not using stops in position trading, full stop, but you're not using stops which are really, really tight and can really affect your P&L. Scalping strategies that are risking 0.5% to 1% risk on the 5-minute time frame, you will find it very, very, very difficult with a lot of them to actually replicate those results in any shape or form, because you just won't get the order execution. Which is kind of why on this one that I'm trading at the moment, there you go, TP1, whoa, hit. So that's a 2-hour return. So so basically the losses from the shorts are completely back, done. $111 is the very worst case scenario today. Best case scenario is $1,000 right now. Yeah, the one that I'm testing at the moment has got slightly wider stops, as you can see, which you can still do with the opening range breakout EA. You would just set your stop loss, instead of 110% of the range, you set it to something like 150 to 200% of the range. Gives you wider stops on the breakout. You will get hedged. But as you've seen this morning, so what? I got hedged on the DAX this morning. I triggered short and I triggered long, and then I sat there in both long and short. Don't care, because the nice thing is now, doesn't matter which way it goes, does it? As long as it goes. Yesterday on the DAX, we had the worst case scenario play out, where we went short, we went long. Yeah, we got stopped out on our long position, and then we got stopped out on our short position. So that was a double-ended stop out. That day is exactly what I was talking about. You can't make money on a rotation day. Rotation days are very, very, very difficult to make money on. Trend days, you can't not make money. As long as there's more of those than there is those, which there is, the edge works. That's what the opening range breakout strategy is all about. But you have to give your trades room to play out. And this is the thing that I'm finding with the ORB strategy, is some days you just get chopped to death. But you're trading 5 minutes. So, you know, I'm not surprised, because, you know, there's a good example there. Look, if let's say, for example, today, this hadn't have gone short first and had just gone long, we've just locked in 1% guaranteed, or you could have taken 2% without that stop. So the days it just goes the way that you want it to go without taking you into a double entry, brilliant. You have 5 of those on the trot on a proper count, you've just banked 15 grand. You've paid $500 for the proper count. You've just banked 15. You're only going to get 75% of it, but yeah, that's what it's all about. Waiting for these days that you don't know when they're coming. They will come. You don't know when. So you're going to sit through frustration. That's just part of the game. That's what ORB is all about. Thank you, Lee. Wish I'd have found you 5 years ago. I wish I'd have found myself 15 years ago, to be honest, because then I would have put myself through 10 years of pain. Franco, trading partner I pointed to you, just text me. What? Trading partner I just pointed to you just texted me. Loves your views and style of market structure. Said, why pay for a course when he's giving you a masterclass in structure? Yeah, exactly. The only reason I put my course up there for free is basically because I spent 15 years buying courses until I found somebody that taught me for free everything that I learned in all those courses. And I suddenly realized that everybody teaches you exactly the same thing over and over again, but misses out all the important stuff. Because if they tell you all the important stuff, you won't buy their next course. Point in case, Nirav and oh my God, I've forgotten his name. One of the other guys I bought a course from, who was absolutely brilliant, by the way, but I can't remember his name. He's just sent me an email saying, I got a new course out. I was like, oh, I just bought your course. Like, I got a new one. Like, but I just paid you to teach me how to trade. Yeah, but I didn't teach you this bit. Like, all right, so now you're drip feeding your courses to me. So not only have I just paid you X thousand pounds for a course, now you want me to pay you X thousand pounds again because you missed something out of your bloody course. It's the world we live in trading. It's all going to be the same stuff I already know. It's just reworded it. So the useless retail candlesticks are now probably called something different. All right, thanks, mate. You have 2 stops. Bates, how? You have 2 stop, 1 TP, and you're in profit. How? You have 2 stop, 1 TP, and you are in profit. Right. Burke, that's a silly question. You're going to know the answer to this as soon as I say it. There is my entry short. There is my stop loss. There is my entry long. There is my take profit. Can you spot the difference in size of the stop loss and the difference in size of the take profit? My stop loss is 1R My TP is 2R. Therefore, I've made twice as much money on that trade as I did losing on those 2 trades. So a 1R times 2 is a 2R loss. One trade at plus 2R cancels out the loss. I have a runner in profit. This is trading 101. You've been in here long enough. This is baby pips stuff, right? I took 2 trades. Both of them stopped out. Because of slippage, one of them lost me $438 and one lost me $397. They should have both lost me $400, basically. My TP on my 2R made me 953. Therefore, I have a positive return. Now in the back tester, that would be 0. Because in the back tester, I would have got exactly the prices I'd asked for on all of my trades. And every TP and stop loss I hit would have been minus spread. So it would have either ended up as 0 or kind of minus $10. In the real world, you get slippage. You're never going to, and this is, again, I've said this many times, you are never, ever going to replicate anything in the back tester that you get ever in the future. It will never, those market conditions are never going to happen again. And the trades, if those market conditions did happen again, exactly, you would never get exactly the same execution on those orders that you got in the past. When you're trading 5-minute timeframes with 0.5% risk, a slippage from there to there could cost you $100. If that happens 100 times, you do the maths. It makes a massive difference to your P&L. Yeah. So if I misunderstood your question, apologies, but that's pretty basic stuff. Yeah. So I take 2 trades short and I take 2 trades long. If both of the shorts stop out, I go 2R minus. If my 2 trades hit TP there, I am 4R plus. So therefore I have a running P&L of 1,000. P&L sitting at closed at 100. So I can shut that right now and walk away with 1% gain. Because my reward is higher than my risk. Risk reward. Bog standard. Day one trading. Never take a trade unless you have a positive R. If you're using a stop loss, if you're not using a stop loss, do what the hell you like. As you know, that's what I do all the time. But if you're using a stop loss, you have to have a positive R. If you don't have a positive R and a 50% strike rate, you cannot make money in any market at all, regardless of your strategy. It won't work. Unless you have a 70% strike rate, of course. But if you've got a 70% strike rate strategy, give me your strategy. I would pay you for it. Because there isn't a strategy with a 70% strike rate that I've found. You know, most banks and institutions have a 30 to 40% strike rate. 30 to 40%. That's all they do. But their rewards are way, way, way higher. Yeah. Because banks and institutions know that if you try and go for something that's got a high R, it's going to fail at some point, because to get a high R, you've got to use data which is never going to repeat itself. So the best thing you can do is go for those big winners and get them less often, but make more money doing them. A la opening range breakout. Yeah. You've got to wait for that. That's payday. I had luck and used the 5-minute OR and not the 5-minute pre. Yeah, perfect. That worked beautifully today. So the 5-minute opening range today was that one. So the 5-minute ORB today, if you took the 5-minute ORB, you didn't go short, you only went long. Happy days. You are sitting on a mortgage payment. Fantastic. Gurus, criminal enterprises, hate how they take advantage of people. I know, we're terrible, aren't we? But it's like, you understand what a guru is when you've followed a load of gurus. That's the thing. You don't understand what you're being, what you're in, what loop you're stuck in. until one day the penny drops that you go, you buy a course or you do a course or something, and you suddenly go, I didn't learn anything. And that's the point where you suddenly go, hang on a minute, thinking about it, on the previous course I didn't learn anything. He just called that something else, but it was the same thing as that guy called something different. And then all of a sudden you go, hang on a minute, they're all teaching me the same thing in a different way. And then all of a sudden you like, hang on a minute, I've been done. It's basically the way it works. I've done a video on it. There's a video on the website about it. I think I put it on the website. It's definitely on YouTube. No, I don't think I put it on the website. Oh, yes, I did. Yeah, that one. Stop buying trading courses. Go and watch it. If you're stuck in the loop of buying indicators, courses, EAs, that video will explain what you're doing and subconsciously you don't know it. I did it for years. Everybody does it for years. It's what we end up in. We end up in that cycle of buying stuff that's going to guarantee the market's going to pay us. But you don't realize until you realize that you've just been buying the same box in a different color all your life. And none of them work. If they worked, you wouldn't have to buy the next one, would you? So and this is what, again, everything you need to know about trading is on my website. That video, watch that video, then read this PDF. When you realize you are in stage 2 of trading, which is conscious incompetence, everything you're doing is not working. That's when you suddenly go, nothing works. And that's when you get the eureka moment. And that is where you discover that there isn't a system or strategy that works because you don't understand how this thing moves. When you start concentrating on how it moves and realize how it moves and why it moves, you suddenly won't buy any more courses because every course will contradict what you now know is that you can't predict the future. That's the only thing you can't predict. And every course teaches you how to predict the future. Again, bringing us back to the beginning of the live room, moon cycles. You can't. I had no clue that was going up today. Neither did you. Burke, my English is not very well. Sometimes I can't ask what I want to ask. All right, okay, that's fine. Your English is not very good. We should do English lessons as well, shouldn't we? I'm probably not the best person to learn English from. Being English. Anyway, I've got to leave it there. I've got stuff to do. So I will be back this afternoon at 2:20 and back Monday at 7:50. I'm going to take Tuesday off next week because it is 4th of July. Markets are shut. So the US obviously is closed. The UK typically on bank holidays in the US is very, very quiet. We've got no afternoon session anyway on the indices. So I'm probably going to take Tuesday off. So I'll be back on Monday, but I probably won't do anything Tuesday. And obviously if something like the yen goes ballistic on Tuesday because the US is shut, I can't do anything about it anyway. So, so always good to take a day off when the US markets are closed because there's not a lot happening. But if you're using the EA, it will get you into trades anyway, so you don't need to worry about it. No, you're teaching real life view of the market. Exactly. Which one is better, 5-minute pre or 5-minute opening range? Go and back test it, Mick. You tell me. You will find that neither is better because you don't know which one is going to be better. You can't, right? So just before I go, what I've just been talking about, right? If you do a back test and over the period that you back tested, the 5-minute pre-market range was better than the 5-minute opening range. Yeah. What does that mean? What has that just told you? The period of time that you tested, the 5-minute pre-market was better than the 5-minute opening range. Go and do that test again on a different period of data, then repeat it on another period of data, then repeat it on another period of data and another period of data. When you've got 5 tests over a period of 5 years that tell you that the pre-market is better than the opening range, use it. If you can't determine that that is better than the 5-minute opening range, and you will probably find that it'll be somewhere around that, you'll realize that it doesn't matter which one you use. But if you can find one that you think is better, use it. But I don't know what you want out of it. If you're going for a 1.5 R and I'm going for a 2.5 R, I might have a different test result to you. I will have a different test result to you, won't I? Yeah. The days where it goes like that, the pre-market and the 5 are both going to get killed. The days where it goes like that, they are both going to make amazing money. The days where it goes like that, maybe the 5 might have an edge over the pre-market. But if you've got an equity curve that gives you a positive return on a year, does it really matter? They all do. I know they all do because I've tested 50,000 system parameter permutations of the opening range breakout. They all return a positive result. Pick one. Pick the one that you prefer. Yeah, there isn't one that's better than another one. Every day, one will be better than the other. Today, Amy did better than us because she took the 5-minute opening range break. Yeah. If you took the pre-market, you got whipsawed. Yeah. So if you ask Amy which is the best today, she will tell you it's definitely the 5. If you asked her yesterday when the pre-market went bang and made 1.5 R, then came down and slammed through the low, went up through the high, slammed through the low, and the 5-minute opening range break got whipsawed, she will tell you that the pre-market was better. Depends which day you picked, doesn't it? Which one's best on which day? The one that worked. Which one works every day? None of them. All of them. Yeah, do you see the point? You can't. You're asking me to predict the future. I can tell you what's happened in the past, but I can't tell you what's going to happen in the future. I couldn't tell you today with the 5-minute was the one to take. Couldn't, could I? Impossible, because I don't know what's going to happen. Full Moon Monday. That makes sense? You will realize over time that it doesn't matter how much you test. The more you test, the more you'll tie yourself up in knots. The best thing to do is test different systems, different parameters within systems. If all of them have an edge over a period of time, some of them make 15 grand, some of them make 5 grand, be content with the fact that they all make money. Yeah. If I've backtested something and it made a minimum of 5 and a maximum of 15, and then the following year it made 25 when I traded it live, happy days. But I'm going to sleep well in the fact that I know that over all of my backtesting, every single permutation made profit. That's all I'm interested in. I don't want to lose money. I'll make what the market gives me. And if the market continues to rally today to 5R, I will make 5R. If it doesn't, I won't. It's not down to me how I get paid, is it? It's down to the market. Amy, I don't like the pre-opening because of my feelings. It's too fast and too whippy. Exactly. As you just said, it's your feeling. Pick the one that suits you the best. It drives me nuts, the pre-market, which is why I'm developing this version of the EA to take that decision out of my head. I've determined that there are certain ranges that work better than others the vast majority of the time. So if I see those conditions, I don't want to get in. So if I can take those out of the equation, it makes me sleep better. It's not going to make me any more money. Yeah, the removing of these does not increase the profitability of the opening range breakout strategy. It increases my sanity. So that's why I'm doing all of this testing, and this is why I'm live testing these at the moment, is because I want to prove to myself that this is a much nicer way of trading. And as you can see, it's much nicer. I'm not making more money. I'm happier seeing that profit today, knowing that the reason I've got it is because I didn't get whipsawed. If I'd have used the opposite end of the opening range as the ORBEA does at the moment on a 110% stop level, it would have been a double-ended stop out and I'd be cross. I've got less profit than I would have had using the tighter ranges because I'd have more lot size and I'd be out faster and I'd make more money. But I'm happier as a trader because I didn't get stopped out on the long. Yeah. So you've got to take all this into account with every system strategy as well. You're a human being, you have feelings. Backtesting doesn't give you any of that information until you start testing it live. People constantly going, oh, the opening range breakout's rubbish. In backtesting, it was really good. I've been testing it and it's blown my evaluation. Then I get someone else on the same day send me a message saying I've just passed phase 2 of the evaluation and got funded using the opening range breakout EA, because they were both using different settings. One person was watching it and closing it and then it flew and they were like, the other person wasn't watching it, let it do its thing, and it worked. Just got to trade. There's nothing you can backtest that is going to make you any more or less money. You've just got to find something that's got a long-term edge and deal with it as it goes. Days like this, yeah, you'd be stupid if you didn't get that stop loss and put it under there. Yeah, because you're sitting on $1,200 of profit. So worst case scenario, I'm going to lock in $930. The EA has been programmed to leave that stop at break even. Right? That's what the EA is doing. It's told to now close this position at 2 p.m. this afternoon, half an hour before the New York Open. Because in backtesting, that has proved the most profitable way to do it. As a human being, I'm finding it very hard to sit there and look at $1,000 and not push the button to close it. So, you know, if you are the type of person that's watching this, you're going to have a totally different result to a person using exactly the same settings that is at work at the moment, not looking at it, and he's going to go in his lunch break and go, brilliant. The person sitting here watching it will get stopped out on this, but it will actually run to 5R today. But I'll take 1,000 and I could have taken 3 because I'm watching it. This comes into it as well. Just because it's an EA and fully automated doesn't mean you're not going to intervene. You're a human being. Yeah. You're a trader. You've got to be able to deal with the situations as well. Any upgrade on the EA you make? Does it upgrade when someone already has the previous version? This is not going to be an upgrade to the EA. What this is a totally different logic. I can't apply it to the old version of the EA because it only uses one range. It doesn't use multiple ranges. It's not going to be something that's going to be plugged into the old EA. No. The old EA works. I'm not changing it. So many people are happy with the opening range breakout EA doing what it does now. I'm using it. It's working absolutely fine. Yeah. If I suddenly go, tell you what, guys, we're going to scrap all of those 3 ranges you could have chosen in the past. We're now going to use artificial intelligence logic to determine whether or not it will or won't take a trade. I can't do that. I can't unprogram that logic and put a completely new logic in its place. You see, if I was to put this out there, it would be a different thing. But I don't. There's no better edge, as I keep saying in here. This isn't making more money. It's just trading in a different way. In the same way as someone else will wait for the 15-minute opening range to go in, and they will then make a decision after that 15 minutes has gone past as to what to do. They're trading the opening range of the DAX. They're just trading it in a different way. There's 1,000 ways to trade this thing. They're all different. I can't build one EA that encompasses absolutely everything. It would be far too complex. No one would even understand how to use it. So there's an argument for leaving it on its own. Unemployment's just come out for the Eurozone, as has CPI, flash estimates, negative. Not interested. So CPI just down year on year 0.1, which is we knew this because we saw it was going to be roughly the same from the German results as expected. 0.1. So nothing exciting. Right, I'll leave it there. I'm definitely going to leave it there now. I'll be back tomorrow. No, I'm back this afternoon, 2:20. See you then. If not, I'll see you Monday morning, 7:50, same time. So have a good day.